Thank you for joining us, everybody. It's always a pleasure to have you. For those of you who I haven't formally met yet, I am Megan Stang, and I'm here to bring you Connect.ca Realty's October 2024 newsletter. Please like and subscribe if you enjoy the awesome content that we're about to bring you. So there's been a lot of negative press regarding the housing market over the last little while, so I just wanted to start off with some really positive news. Home sales across Canada have hit a 7-month high. Many factors are at play with this, but the Bank of Canada cutting rates this year has really brought some positive sentiment back into the market. Buyers have increased their purchasing power, and more people now have the ability to afford a home. So, do we expect a massive spike in home sales over the next few months? No, but a gradual increase is more of a realistic expectation. And these few slides that we're about to go through will explain why. So, as I just want to say, as we finally take a look at these, I really think you're going to start to notice in the market stats that they indicate that people are really starting to finally make some decisions. So this slide, for example, is just a really quick overview showing some key points that we'll go into more depth about. So the first is home sales are up by over 44% year over year. That is a big jump. New listings rose by 4.3%. And lastly, despite faster sales and tighter inventory levels, the average home prices still remain relatively even from the same time last year. So let me take a look at this. It's been a tough go on the market since February of 2022. That's essentially 32 months of tougher times in real estate. And let's leave February for a moment and focus on July of 2022. That's in the middle of the chart there. That's when they lifted the rates by 100 basis points all at once, and we've been fairly stagnant for pricing ever since. It's kind of the floor of Toronto pricing. But now you can see on the right hand of the slide the direction that we're starting to head in when it comes to prices. And what we always see first before prices increase is the sales volumes increase. And that's what we finally saw this month. So this chart is great. It paints a really clear picture of the year-over-year stats when comparing last October to now. Like, it's a 44% increase. That's a really big jump. This October was the third busiest month in the last 13 months. And that means that October beat out most months in the spring and summer markets as well. So why did this happen? Many things have contributed collectively to this uptick in transaction volume. So we know one of those points, a major one, is the 2 rate decreases at 3/4 of basis points each. We know the bond market has moved down because inflation is getting under control. There was the CMHC announcement that will start to affect the market in the coming months from now. And that really had people kind of saying, hey, maybe now I'm able to buy a little bit more home with a little bit less money down. So that was a really cool add to the market in this last little bit too. And then it's also still important to note that the US rates have come down and the US election is now behind us as well. So with all of these changes, October sales were up 44% prior to many of these changes actually fully taking effect into the market. So there's more to come on that. And the other thing to really take away from these stats are that prices really haven't moved yet. So as I said earlier, sales volumes move first, and then prices start to follow after that, which is what we'll start to see in the stats in the coming months from now. So we're not at a point where we have super low inventory like we experienced over the past 5 years, which is a good thing. So this is kind of a big blow to any of our buyers. At Connect, we are trying to encourage you right now to get into the market. Now is a good time, and it's a great investment strategy. For you to make a great investment decision, you have to be in the market, and the timing couldn't be more right now. So with that being said, let's move into a little bit of a history lesson between average home prices and the overnight rates. So this slide here does a really good job of indicating what exactly happened relative to the market a little bit ago. So if you see here, the COVID vaccine got the media attention in November of 2021, and the prices, the red dots, started to skyrocket in the months just following that. That's kind of in the middle of the chart. And then the Bank of Canada kept the rates too low for too long. That's those nearly existent blue dots on the bottom of the screen. And then the average prices started to rise. The Bank of Canada then had to make a change as inflation hit 8% because it was left for too low for too long. And it wasn't coming down on its own. So they hit the brakes really hard. And you can see when the blue dots shot up, what happened to the prices and the market because of the prices of homes dropping out. And the market became pretty stagnant. So you can see there, that's kind of like the base Toronto prices, and they kind of never moved. The Bank of Canada just recently has been releasing its hold, and it's doing it slowly, which is great. And over the last 5 months, you can really see where we're starting to trend again now today. And this will take time. It takes a few months after decreasing rates for there to be a big change noted in the market. So as summarized, not a lot of price growth yet, 1% year over year, but 44% more sales. And interest rates now are allowing roughly 20% more purchasing power than they were allowing at the same time last October. So that as well is absolutely critical to note because buyers are starting, if they haven't already fully taken notice, and they're thinking we should get out there and we should do something about this opportunity. And many have, which is why sales are up so much. So as a buyer, you want to be in the market when there's less people in the market. And that's the formula that we really have right now, or that we had. So this is changing. So if you haven't talked to your mortgage broker, if you don't have a mortgage broker, you don't know how to start, please reach out to us so we can get you started making some really good investment decisions. So also, as I've explained to many of you on the phone or in our one-on-one chats, although inventory is coming down, inventory is still up, which is why prices haven't started to move. This is normal. This is expected. We currently have 25% more home choices than we did at this time last year. We have like 300% more home choices than we had back in the seller's market in 2021. Like that's such a big shift, and that's a major opportunity for buyers. It may also be an opportunity for sellers depending on the cycle of the real estate home ownership that you're currently in. So as most sellers are buyers as well, if you're selling to purchase a larger real estate investment, say moving from a condo to an even bigger condo, now would be the time to capitalize on the market. The cost to step up has shrunk in the condo market. So if you're going to sell your place when everybody else is also up in price, then your larger purchase will also be elevated and the purchase price and the price gap of the two will have grown. So it's a good time to buy right now if you're stepping up. Some key indicators in the affordability gaps. So the affordability gap should also be addressed here as the price gap between buying a condo in the GTA versus a detached home has broken the $1 million mark. This is new as there's been many months of trending prices that have been under this dollar amount. So this data means different things depending on the type of buyer that you are. If you're looking to purchase a detached property, the market is starting to increase. So if you really don't want to be priced out, you should really start talking to us. This also means that most first-time homebuyers won't be able to afford that big house with the lawn and the pool as their first home. But really, you need to get in the market and start building your equity. So the clearest way to go about this is through condo purchases. And that's the trend that we always seem to see when the demand starts to increase. So historically, as the gap grows, as it is growing now, the prices of condos start to increase as well. Now let's take a look at the 416 versus the 905. As average price of condos in the two areas starts to shrink, the properties in the 416 always become more desirable. And that's because of the quality of life that Toronto has to offer. You know, we have the bars, the entertainment, the proximity to work, the teams, the transit. So as Chris had mentioned last month, there was an expectation that this gap was going to grow, and it has. And we expect it to continue to grow as the inventory comes down. All right, so now what's hot? Let me tell you about a couple pre-con projects that have many investment benefits that are currently selling on the market. So we have Platform, it's downtown Kitchener, directly across from the Google campus. 4+ year out occupancy date, small 10% deposit structure. There's low purchase prices, and Airbnbs are permitted. So all of that is, really great benefits from an investment perspective. If you'd like something even lower in purchase price, we're going internationally to Punta Cana and the Dominican Republic. Both Wave Garden and Palmview have many tax benefits, and the properties are fully furnished, have hotel management, so it really makes a kind of hands-off approach to investing. Something you should be watching coming up, Free Blue Mountain just is now accepting pre-reservations. So it's directly across the base from Blue Mountain. It's hotel managed as well, and the suites are furnished by Restoration Hardware. So this is an awesome opportunity if you want to use the place yourself, but then rent it out when you're not there. From the resale side of things, we have some great listings in the resale market right now. The one I want to highlight is a 2-bed, 2-bath at the Keeley. It's a beautiful building. It's a great location. It's an amazing price, and it gives you vacant possession, which are all really highly desirable factors when it comes from the resale standpoints. If you need a 3-bedroom, but the affordability gap is a little too high, there is this also brand new, never lived in condo with parking at 199 Church Condos. It's right downtown, so commuting's a breeze, and rents are more lucrative as there aren't many 3-bedroom units in inventory, and alongside the building is rent controlled. So I hope your time with me has been fairly informative. Thank you for your time and watching this video and reading over the newsletter. As always, I am available to go over any of the information with you one-on-one and to see what opportunities may be best for you. So until next time, just have a great day.